Hey guys, Infidel 1258 here. I want to talk to you today about the Dow Jones, the stock market in general, irrational exuberance in that stock market, and what I think we can see, what I think we can take away from yesterday's Dow Jones rally of 600 plus points, which is the greatest single day increase in 8 months. Well, the first thing is what caused it, or what are people attributing that result to? They're attributing that result to Jerome Powell's statement about 2019 and the Fed's plan for interest rate increases. And if you don't know, Jerome Powell is the chair of the U.S. Federal Reserve, which is the central bank of America. It's important to know kind of what he said, which is he said very little and he promised absolutely nothing. When I say promise, I mean they can come back and change their minds. Yes, the statement was quite clear that they plan to proceed cautiously and be careful about how much they increase interest rates. But that's not a promise to do A, B, and C precisely. It might be C, B, and then A, or X, Y, and then Z. We really don't know. And so the first thing is he said very little and he promised nothing. But the second thing I want to say about what he said is this, that he implied that they would lower their rate of increasing the interest rates, and he suggested that they want to proceed cautiously, and that, I guess, that allowed people to kind of take a deep breath, because this Dow had been being hammered for about a week. It's been all through October, November. It's been in real trouble, choppy waters. Lost about 2,500 points, and the last 5 days it's gained about 1,000, but choppy waters. And so he said, essentially, we're going to be careful, and we're going to be cautious. But what does that even mean? Why is that a reassuring statement? Ask yourself this question: aren't they always being cautious? They should be. Aren't they always proceeding, as slowly as is practicable while, seeking the results that they want? I hope so. That should go without saying. But that's all he said. That's the meaningful takeaway from what his statement was. And yet, on that essentially nothing, on essentially the hot air of those, not even promises, but just, I guess an easing of the rhetoric that he has put out about the future of interest rates, we see the biggest single day gain in the Dow Jones of 2018, almost, of the last 8 months. And my point is this: on the back of that statement, so what? Slow and steady should go without say. And second of all, how much slower can we get? Interest rates are right now at historic lows for the last 9 years, since the financial crisis, or 2008 Great Recession, that never really unfolded because of the practices that the Federal Reserve used and the government used to quantitatively ease our way out of that. But they didn't ease us out of anything, they just deferred it. And so how much slower can we go? The answer is we can't go any slower, really, without never raising them. And that's the point. Corporate America and even the US government, I believe, really don't want interest rates to ever go up, because it means that the money they borrowed for essentially free is going to have a higher cost to pay back. And nobody wants that. They want a free ride. They want constant gains in the stock market. And we can't see constant gains if credit is hard to access. And so let's keep interest rates at practically zero so that we can borrow for essentially free and then buy back corporate stocks, driving up the price to make a bubble bigger and bigger. And the same is true with real estate, and the same is true with bonds, and the same is true with every asset class except for gold and silver, which are, I would argue, being manipulated downward through paper contracts, but that's a separate conversation. And so just going back to Powell's statement and the meaningfulness of it, or lack of meaningfulness in it, slow and steady, so what? Of course you should move slow and steady, but what does that even mean? And second, how much slower can we go? It's been almost at free interest for 9 years. And then You look at the interest rate history, it's at historic lows even now. And so when we talk about moving from 2 something to 3 something, and we make it sound like that's a critical and that will have detrimental impacts on the U.S. economy and the global economy as a result of how that affects the ramifications of it, it's insane to me, because it points out one huge takeaway: the precariousness of the U.S. system, of U.S. financial system on low interest rates. Corporate America is dependent on essentially free money, and the U.S. government is dependent on free money. When interest rates go up, the bubbles are going to pop, and everyone knows it. But yet the Fed needs to raise interest rates, because when the bubbles pop, they need to be able to lower them again so that they can repeat the whole cycle. They want to have interest rates high enough that when they lower them to free again, that will have an implication on spending, which will trigger continued growth of the bubble. And the Fed either is of the misinformation or the mistaken opinion that they can just continue that bubble cycle forever without a bear cycle. I disagree. And so just looking at my notes to see if I'm missing any of my important points. Oh yeah, so it seems really clear to me that you've seen the choppiness in the Dow Jones and the stock market in general. It seems really clear to me that the big money is already out, or they have one foot out the door and they're ready to leave at the drop of a dime, and they're ready to plummet the market, while for you, the average holder, while they're, like I say, they got one foot out the door, they leave retaining most of their wealth while you get hosed, because I guarantee most average investors don't have an easy way to sell their stocks. They have to contact their broker has to put through a sale. By the time you even make that phone call, it's too late. And so the point is this, that those with the greatest wealth are going to be safe through the coming crisis of fiat failure. But the way that the system is rigged so that you can't get out the exit first is why I'm a proponent of alternative money, good money, sound money. Like Mike Maloney says, good money is good money is divisible, portable, durable, fungible, and resistant to counterfeit. The US dollar is not these things. In fact, I would argue that the US dollar is counterfeited every day with quantitative easing, and that the fungibility of the US dollar is sacrificed as we print more and more of it, making each dollar worth less tomorrow than today. And so it's not good money, it's currency, and it's bad, and it will fail. While gold and silver have been a historic thousands of years store of wealth, medium of exchange, and a record of account, making it great money. And simultaneously they are divisible, portable, fungible, resistant counterfeit, etc. And also Bitcoin's these things too: divisible, portable, fungible, resistant counterfeit, durable. And so it's good money. So these are the exit doors that I see for myself getting out of this fiat system, where they print money every year to persist these bubbles, grow these bubbles, all the while like burning the system down, because each dollar is worth less necessarily tomorrow than it is today, because you're printing more of it. You're not creating new wealth when you print money. You're creating zeros and ones. And like Ron Paul says, if you could create wealth by printing money, there'd be no more poverty. There'd be no more starvation. But of course, printing zeros and ones creates riches, but not wealth. Creates creates currency, but not wealth. And so I think this is a lesson we need to learn. And I urge anybody listening to this message to seek education around what is good money, to seek education around gold and silver and the merits of holding either of them, to seek education around Bitcoin and how that can be a solution for escaping the fiat system. Because I think the writing's on the wall with respect to the bubble popping, and with big money being ready to walk out the door before you even recognize the house is burning down above you. It's happening now. Do yourself a favor and seek education. Explore terms on the internet like hyperinflation, like quantitative easing, like fractional reserving, like what is blockchain and Bitcoin, like what is good money and store of value, and there's so much good material online. You can look at guys like Andreas Antonopoulos or Mike Maloney, and Mike Maloney's a gold proponent, and Andreas Antonopoulos is a Bitcoin proponent. Seek them out and just educate yourself, because it's very clear that the Dow Jones and the stock markets, all of the indices, are precariously perched on a dependency for free money, for cheap, low interest rates, and the interest rates have to go up because they can't really go any lower. And the Fed is being very clear they are going to raise interest rates. So whether it's next quarter or 2 quarters from now, it's going up, and so you're going to see more dips in the market. It's not going to be a slow and steady fall. It's going to reach a turning point where it's going to suddenly crash. Make a decision, seek education, set a path, preserve your wealth with real physical, gold and silver, not paper, gold and silver, and Bitcoin that you hold the private keys to. If you want to know more about my opinions on cryptocurrency or gold, or follow my content for, personal stuff like my family or my faith with Christ, please like and subscribe. I'd love to have you along with the channel. Also find me on steemit.com at infidel1258. And I talk about Steemit too here. So guys, thank you very much. I hope this video finds you well. I hope you have an awesome day. God bless you. Bye for now.